Sure. I was gonna hit on real quick the kind of the difference between fundamentals and technicals. We look at mostly the technicals for shorter term trading, not necessarily day trading, but more for swing type trading, a couple days, a week, a month, maybe something along those lines. Definitely less than a year. And those technicals consist really of the charts, the graphs, all of these things that we keep going over are technicals, and there are some that you can add. This has a Fibonacci drawn on it. Some of you know what the Fibonacci is. Some of you are maybe not aware of that yet, but I'm sure we'll go over that again at some point. But looking at all these bar graphs and the lines and the histograms and everything, those are the technicals, and that's what we use to try to predict our trends and patterns, right? The fundamentals are usually a lot of the ratios and the ranks, and this is what long-term investors really are looking at, and they want to know that a stock is, or a company is basically undervalued. Say it's a great company, but the price of the stock maybe doesn't represent how great the company is, so it might be undervalued. And so they're expecting that stock price to rise to compensate for that till it's balanced out. And they calculate that out basically by using all of the financial statements from the company and calculate a lot of different ratios basically to figure out what the fair market value is. And a lot of the fundamental traders don't necessarily like technical traders. They seem to kind of butt heads a little bit, but in this club, we like to use both, because we really want to make sure that what we're investing in is a solid company. It's not something that's going to turn belly up instantly, but we also want to use the technicals so that we can get in and get out of trades and make a little faster money, be a little more profitable. But I think by merging both of those together, you get a much better picture, makes you feel a little more confident. So in future meetings, I think we'll dive into what some of those ratios are and what they mean and what you're looking for. One of the things that we really wanted to talk about today was the shorting information, and within shorting, that is kind of a fundamental. It can give you ratios. It can tell you really what direction the institutions are leaning towards. So it's really good information, but it's very hard to find accurate information or current information on shorting. A lot of it will be 2 weeks old to 3 months old. So that's where the advantage comes into Mayor's spreadsheet. So Mayor, I don't know, are you ready to turn it over to you?
Sure.
All right. I'll stop yapping away and
no, I appreciate it. Keep